some of the quant funds and some of the more volatility-oriented strategies have targeted. But when you get these very unusual factors, this year being so unusual, it just makes the Sharpe ratio of a lot of these strategies compromised and all else equal less attractive.
Very quickly, images from Berlin of water cannons. I mean, this started out peaceful with Francine Lacroix earlier this morning, and with that image there, you don't see it. On Bloomberg Radio right now, it's just crowds assembled in autumnal Berlin, and moments ago, there was substantial use of water cannons. We don't see that right now, but there it is. I'm going to call it a more distressing situation. Dean Kernett, your world seems so removed from pandemic agony. Are you surprised by that?
I think that, this is a very, I think 2021 is going to be challenging in the sense that the social aspects of, this pandemic are unrelenting and they're so significant. The policy response in some ways creates additional dislocations in terms of, the haves and have-nots. So it's going to be very tricky, especially as we transition to a new administration and one that wants to re-embrace globalism. There's a lot of those uncertainties, out there. I think geopolitics have been typically more bark than bite, but we always have to just keep an eye on the types of things that markets tend to forget over time. We cross different things off our worry list, but, oftentimes there's just things that we can't predict. So, even as we say, use volatility, use options on the short side to try to generate some premium in 2021, we have to be on guard for the types of things that can go wrong. And then what do we learn? We learn that over time, especially during the good times, we underestimate the jump to illiquid conditions, right? The speed with which markets can turn very illiquid very quickly. I think that's a key lesson from 2020 and something that, as we talk to our clients at the back end of an incredible year in so many ways, it's just to be prepared, for the unexpected.
A record high in the stock market in February, a month before we locked things down in America, and a record high in the stock market as things are locking down again. Not in the same way, but it's similar. Dean, great to catch up, sir, as always. Dean Kernett, Macro Risk Advisor, CEO. Tom, there's always something to worry about. There's always a downside risk. There's always tons of downside risk. Just right now, there's a lot to worry about in the near term into year end.
And I do think the media change is different. I mean, I was weaned in 74, 75, John, and it was a horrific manufacturing slowdown into a good equity market. And just real simply, back then we didn't have the media onslaught we have now, the social media onslaught as well. Futures up 5, they pull back a little bit here. Right now, on temperature, because of physics, the thermodynamics of all this vaccine talk is about temperature, keeping vaccines safe for transport, making them efficacious up to the point of an injection. Franz Werner Haas joins us right now with CureVac of Germany to talk of this temperature. Franz Werner, how do you react to one vaccine at an unimaginable 90 degrees Fahrenheit and another one being refrigerated? How does that occur?
Well, it depends most probably on how you're working with the mRNA, how you're stabilizing the RNA, and how you're manufacturing the RNA. This is more or less the only points where it really could make a difference. And as we are holding on the RNA for all our vaccines, we have got a rabies vaccine, which is already in the clinics for a while, that we have seen that the property is that you can have RNA pretty stable. And then certainly on the product by product or target by target, you have to reevaluate again. And with the COVID-19 vaccine candidate we have got in the clinic, we see the 3 month.
Well, you see it within 3 months, but the mystery, I think, to all of our viewers and listeners is almost back to the 1950s, and I remember the liquid nitrogen in doctors' offices as well. Is that what we're heading back to, is we're going to have those metal containers with the smoke coming out of them when I was a kid?
No, I don't think so. As we have got a stability of the COVID-19 vaccine candidate already at 3 months, and this is up to 3 months minimum. So it will be extended because all what we do is real time. And you have to see that now the RNA vaccines, not only in our hands, but also in the hands of the others, this is brand new. We can make a difference. And then certainly the development of the stability will increase as well and will get better and better over time. This is what we see. And, this is really something we have to work on, and we will.
So given the fact that you're on the front lines of this, actually manufacturing potential vaccines, can you give us a sense of your timeline of how quickly you think that manufacturing could get ramped up and distribution channels could get solidified so that we get a critical mass of people immunized against the virus?
Well, we are mRNA manufacturers, not only developers on the one side for the molecule, but to have it as products, but also manufacturing, because this is what you need since 2006. And it is certainly the scale up you always do according to what you have got in the pipeline. What is the need you really to have the capacity for? When we started 2 years ago with our fourth product line, which is an industrial scale, nobody really was believing in that you need this big scale. Certainly nobody knew at the time that we are talking about COVID-19. But since the beginning of this year, all this capacity which is going to be built up, and as we are actually building this up, not only we at CureVac, also others, this is mRNA capacity which stays even beyond COVID-19. It will be a part of the preparedness thought, because there will be other viruses coming, and RNA can make a difference, obviously, and for that the capacity is there. But you can't get from 0 to 100 within a minute. But all what is at the moment what we see as scaled up worldwide, globally, beyond CureVac even, there will be enough capacity to really vaccinate the world. Well, let's say until the end of next year.
So, Franz Werner, when you talk about mRNA and the potential differences between the vaccines, Tom Keen's ears light up, or his eyes light up and his ears perk up as he tries to imagine the sequencing here. Most people's eyes glaze over. They don't know the difference from one vaccine to another. People talk about how it's important to have multiple vaccines, but does it complicate the issue? I mean, who gets what, and why is that important?
Well, we will see, as this is what we are doing is all in real time. If you compare it with other vaccine developing strategy in the past, so whatever was the real world in the past, this really has been accelerated without doing any concession to the safety and tolerability of the vaccine. But you have to see it target by target, and this is COVID-19, and what it does to the immune system, how long the protection will be. This is all to be seen. At the moment, there are, head runners on not only on mRNA, but also on protein-based and viral vector-based technologies. And we will have to see how long is really the protection level, the memory effect, and what does it do to the different immune systems of, people with indications, respiratory indications, elderly people. And this is all what we will find out. What we see is that most probably most of the vaccines have different properties, and then certainly for the different needs. And therefore, it is good to have more than just one vaccine in order to see this later, what is most appropriate for which kind of target population.
Sir, thank you so much for joining us today. Franz Werner Haas with CureVac of Germany. Greatly appreciate that this morning. Right now, on the conversation of these vaccines, it is about big pharmaceutical at the end of the day, and that can be GlaxoSmithKline as well. Here, Emma Walmsley.
We have 3 vaccines partnered in the clinic with others, including Sanofi, because that adjuvant technology is proven in pandemic to work on older people and is a more effective way to get to scale manufacturing, which is the other real challenge here. We need to probably provide up to 14 billion doses if we're in 2-dose vaccines to really protect the world.
And Walmsley there this morning. Right now, David Rubenstein with us, of course, peer-to-peer conversations, and he will drive this conversation forward today. David, what did you learn?
Well, despite the fact that they haven't been as many headlines as, say, Pfizer or Moderna of late, the largest manufacturer of vaccines in the world is actually GlaxoSmithKline or GSK. And it's the only pharmaceutical company of any size in the world that's led by a woman, Emma Walmsley, who's a British woman. She ran the consumer healthcare business for a long time of L'Oreal, then was recruited to run the consumer healthcare business of GSK. Ultimately, they're kind of hiving that off, and she's now running the pharmaceutical business. They produce roughly 200 million doses of vaccines a day. They have more than 30 vaccines that they produce around the world, and 40% of the children in the world get their vaccines from GSK. So it's a very impressive company, though it hasn't gotten as much attention lately as some of the other ones that have been in the news.
Well, I totally agree with you on that, and I'm in that camp where I think it's going to be the other people maybe that get the attention at some point. From your conversation with her, and frankly with all your contacts, is this going to be a messenger RNA, mRNA, modern science solution, or will the more traditional vaccines be part of the pandemic solution?
I think it's going to be the messenger RNA and the more typical, the synthetic ones. And the reason is that normally with a vaccine, it takes a long time to grow a vaccine and to get the virus to grow. We don't have that much time. Normally, a vaccine takes 7 years or so to develop. The shortest ever has been 4 years. And to develop them, it takes a long time to grow the the bacteria that you put into the vaccine. They're typically live germs. Like the polio vaccine has had live germs in it that are from the from polio. That is a much more complicated process, and we don't have the time for it. So the techniques that GSK is using with their partner Sanofi is something called adjuvant DNA, and it's a synthetic type of process. So I think it's the synthetics ones that are going to be the ones that people are going to be using. And the real problem is not so much that we're going to get a vaccine that works. I think we'll get vaccines that work. The problem is distributing them. It's not that easy, as you pointed out earlier in your conversation. You have to refrigerate these, and typically they take booster shots. So you have to have 2 shots. And therefore, you need, if you got 7.5 billion people on the face of the earth, you need 15 billion of these things. That's a lot of time, a lot of vaccines. Also, how are you going to distribute them to the emerging markets? How do you distribute in the United States? For example, who's going to get it first? Is it going to be the business people, the private equity people? Obviously not. It's going to be healthcare workers, people who have health problems. So it's going to be a long time before the average person gets some of these vaccines. I think we're looking at this until the 3rd and 4th quarter of next year before everybody who wants a vaccine gets one.
All right. Well, I like to look at the gloom and doom, but I want to switch gears and be optimistic right now because we all need 2020 to be over. As an investor, as well as an interviewer of people like Emma Walmsley, I'm wondering whether your sense is that all of the money that's been pumped into the biopharmaceutical sector because of COVID-19, has it jump-started a renaissance of sorts in the biotechnology world?
Oh, absolutely. I think we haven't seen anything like this since the space effort or since the Manhattan Project, and probably the Manhattan Project was dwarfed by what we have been doing now. We're putting out staggering sums of money, and I think it will produce a revolution in biotech, and I think it'll be really good for our healthcare system. But in the immediate future, people are focused on getting these vaccines, and one of the challenges we have is a lot of people are afraid of taking them. They think it's been politicized. They're not sure it's safe. And a lot of people just don't traditionally like vaccines. So we got to make sure everybody gets this, or virtually everybody gets it, if it's really going to have an effect.
Well, based on your experience as an investor, given the fact that there is this concern about distribution, about people taking it, about how long this could get rolled out, and we could actually end the pandemic, how much do you factor in the here and now, the pain that we're seeing with the cases escalating, to your longer-term investing horizons and outlooks?
Well, we've been going through a biotech revolution since DNA was really discovered in the 1950s, but it's really taken off, I would say, in the last 10 years. In the last 2 or 3 years, you're seeing enormous advances in this area, and investors of all types are putting more money in this as a percentage than anything they've ever done before. So I think it's an incredible opportunity. Look at Moderna. It's a relatively new company, has never actually had anything approved by the FDA yet, and now it has a market cap of about $35 billion. People want to put money in these things on the on the hope that it will actually produce vaccines and other products that work. And I think people feel they will.
David, thank you so much. David Rubenstein with us peer-to-peer, and a busy, busy Wednesday for Mr. Rubenstein. And, of course, GSK CEO Emma Walmsley, Dame Walmsley, peer-to-peer conversation, 9 p.m. tonight. Lisa, it is an extraordinary day. Just the breaking news flow coming in along with all this. And I'm going to go back, Lisa, to the arch issue, which is aid for the non-fancy people. And it's a real mystery where that is.
Yeah, especially given the fact that you have a number of these pandemic-related relief programs that are expiring in the next few months. To me, this is critical because we talk about the savings rate, the savings glut, but that is not evenly distributed. The people on the lower income brackets are running out of cash. And it's going to get worse because, frankly, you can't keep a restaurant open if people don't want to sit outside in 30-degree weather eating. And this is a real conundrum as we head into the winter months.
We're already seeing that, and folks, today really maybe one or the second coldest day so far this year in New York. And of course, we're experiencing that, as I'm sure many of you are, in radio and TV as well. Lisa, the other thing I see here is the economic data, housing starts. Well, they were actually pretty good, but it's going to be, again, fascinating to get to the first week of December and that critical jobs report.
Yeah, especially given the fact that retail sales yesterday came in as a disappointment. Okay, look, housing has been the standout among all of the economic data. It has continued to absolutely go gangbusters as people move out of cities, move into bigger homes, and there just isn't the supply there. But if you look at the U.S. Citigroup Surprise Index, it has actually fallen to the lowest since June. Basically, people are highballing the economy more often than lowballing the economy relative to where they were a couple of weeks ago. To me, this is interesting. It highlights how quickly moving this economy is, how hard it is to pin down by economists.
Yeah, I'm really glad you bring that up because it is the partition of the economy. Neil Dutta at Masco Risk Perspectives brought that up yesterday, where we see rents in so many of the cities and even in the suburbs ebbing away here, even with home ownership clearly among the elites, rather, as Mitch Rochelle talked about. Let me set up the day for you as well. The Bloomberg New Economy Forum, ongoing with a lot of international perspective today. Gita Gopinath of the International Monetary Fund, no doubt with important comments there as well. Coming up later, the South African president will join at 10 a.m. As part of this discussion. That'll be a timely discussion. Is ZAR is one of those currencies where people are looking at finally appreciation within the emerging space. Not like the Pacific Rim, but nevertheless, it's there. I should point out gold, as we speak of South Africa, $18.74 the ounce, down $11. Futures ebb away ever so slightly, up 8. Dow futures up 123, the VIX 21.97. Stay with us on Bloomberg Radio and on Bloomberg Television. Good morning.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening power with futures advancing 0.2%. We begin with a big issue. Restrictions piling up, infections surging across the United States. Pennsylvania putting restrictions on travelers. Ohio implementing a curfew and joining Iowa. West Virginia, Utah and North Dakota issuing new mask mandates. This as Illinois announces new curbs affecting gyms, hotels, restaurants, retailers and more. The White House, the COVID task force, reportedly issuing a warning to the administration, saying efforts to stop the spread were, quote, inadequate and must be increased to flatten the curve, putting more pressure on officials to deliver stimulus. Democratic leaders sending a letter across the aisle proposing a return to the negotiating table, writing the following: millions of unemployed Americans and those facing eviction and hunger demand action from their leaders. The time to act is upon us like never before. But the two sides are remaining far apart, with Senate Majority Leader Mitch McConnell still focusing on a more targeted bill.
My Republican colleagues and I have stated over and over that we still want to pass more coronavirus relief for the American people. Senate Republicans have voted multiple times to send hundreds of billions of dollars to schools, small businesses, health care, and laid-off workers. If Speaker Pelosi and Leader Schumer had not made the calculation to block it, that money could have been out the door many weeks ago.
The standoff continues. Let's bring in the Bloomberg team, Kayleigh Lyons and Sarah Ponczek for more. Kayleigh, the COVID numbers not great. The advancements on the vaccine front, it improves once again.
Yeah, a little bit of positive news on the vaccine this morning. John, Pfizer and its partner BioNTech releasing the final results of its analysis from its clinical trial for its COVID vaccine. 95% efficacy rate, John, even higher than the 90% released in its preliminary results. Both of those stocks poised to open higher this morning. Pfizer up 2.5%, BioNTech by more than 5%. Now, of the 44,000 participants in the trial, only 170 actually tested positive for COVID. The company saying the vaccine protects people across all ages, including the vulnerable group of 65 and older. It also helped prevent severe cases and had no significant safety problems. So this paves the way for the companies to seek emergency use authorization from the FDA and means this thing could launch by the end of the year. But John, we have to keep in mind this thing still needs to be scaled and distributed. It's not clear yet how quickly it will make a difference in the trajectory of the pandemic because, as we know, the numbers continue to get worse. The U.S. crossing 11.3 million COVID cases as of yesterday. Even Senator Chuck Grassley, who's in line for the succession to the presidency, tested positive just yesterday. And as a result, the restrictions, as you said, continue to come. Illinois governor starting to crack down. In L.A. County, they're imposing new restrictions and warning they could go back to stay-at-home orders because daily infections in that area have more than doubled just since the start of November. It's a solemn reminder, John, that yes, a vaccine may be coming, but in the near term, things are still looking grim.
Kelly, thank you. And as Kelly points out, more restrictions and a warning, there could be more to come. And Sarah, when you look at the price action in this market, I've got to say this morning, muted as you might expect, but in the bond market, nothing. Tumbleweed for the last couple of days.
It really is tumbleweed. It's just quiet. And equity markets might be quiet today, John, but it's remarkable how quiet the bond market has really been all week long. Granted, it's just Wednesday, but Monday, Tuesday, Wednesday, nothing. As you said, even with a lot to take in, COVID and virus news, as Kayleigh just walked us through. Also, plenty of corporate news, too. Boeing, Apple, the list goes on. But here, if you look at the FX and rates market, let's start with the 10-year yield at 85 basis points. Sure, we are setting a higher range than pre-election, you could say, but a far cry from when we were testing 1% just last week. Also, the Bloomberg Dollar Spot Index, very, very slightly lower. Still, though, this would be a fourth day lower, also a fresh low, the lowest since 2018. Crude higher for a third day. We do see a bit of a larger gain here, on pace for a third straight week of gains. One area, though, it's certainly not quiet that we just saw on our screens. Bitcoin above 18,000 for the first time since 2017. I have to point it out. Last month, we were sub 11,000. So the momentum here is just unbelievable. It keeps on going. But if we take a look at the equity market, also very quiet this morning. A global rally, sure, S&P futures pointing higher. The Nasdaq relatively flat. Yeah. We also see higher in Europe and Asia. But something I do want to point out, and if we go across the sea, is that in Asia, if you look at the MSCI Asia Pacific Index, higher for a 13th straight day. That's the longest winning streak since 1988. Yes, over 30 years. But we haven't seen the enthusiasm there that we have seen here in the U.S. or in Europe, because even with that streak, they're still lagging behind the U.S. and Europe over that same time period.
Sarah, thank you. With the Bitcoin mention as well, and I've had so many people write in the last 24 hours asking for a Bitcoin mention. There it is. There it was. That's it. Bitcoin. You've got it. Sarah did it. She might do it again a little bit later in the hour. Here's the story for me. The bond market last week, Pfizer came out with that great news. Bond market, lower, treasuries lower, yields higher, curve steeper. That Monday morning, we opened up 2s, 10s, 67 basis points. Since then, we've gone up and we've rolled over this morning. 67 basis points again, full round trip on the yield curve. We'll get into the why in just a moment, but for that cyclical trade to support that rotation into the financials, do you need the bond market to play ball? That's going to be a key topic for us through the next hour. George Bory of Wells Fargo looking to take advantage of this strengthening economy. He writes the following: our overall fixed income strategy is focused on positioning for recovery, a steeper yield, tighter credit spreads, rising stars in corporate credit, and continuing to look for diversified sources of income and avoiding liquidity traps and zombie companies. George Bory joins us now. George, can we start right there on the yield curve, the difference between 2s and 10s, that spread? What's gone on in the last week?
Yeah, good morning, John. Thanks for having me on the show. It's great to be on, as always. Yeah, you know, as you mentioned, the curve did steepen a fair bit last week on the back of the vaccine news. And I think on the assumption that, you know, sort of the big overhang that the COVID outbreak has really dominated the market all year, without a doubt, all markets. And so there's sort of hope, if you will, that will start to abate sometime next year. You take that plus very easy monetary policy, plus the hopes and expectations that we're going to see a little bit more fiscal support either by the end of this year or in early next year, kind of takes the relief trade, if you will, out of the treasury market. And so all of that demand for very safe, secure bonds out at the long end has started to abate, and I would say abate somewhat. So we saw a sharp steepening, but then, as you mentioned, you know, the slow and steady drip of information that's been pretty dismal, to be perfectly you know, kind of honest about it, is that, you know, the COVID statistics are pretty sobering. And so it's a little bit difficult for bond investors to rush out and just simply kind of throw caution to the wind, if you will, and kind of dump all your treasury bonds because you think yields are going to go straight line up. The reality is it's going to take some time for the bond market to readjust. We still have some very meaningful headwinds. The data is getting worse, not better. The statistics from COVID are getting worse, not better. And while there's hopes for a vaccine, the reality is that vaccine probably doesn't come to the fore until probably the second quarter of next year.
So, George, your call is, though, that trade will develop over time as we work our way into 2021. You've done a really good job of just separating the phases that we've traded through 2020 into year end. What's significant about the phase we're in right now, George?
Yeah, when we think about the bond market, so the bond market's has had a very interesting year, dominated by three very kind of distinct periods. The beginning of the year, the first quarter of this year, was when the COVID outbreak really, you know, sort of hit the market, and bond yields collapsed. You know, bond yields came down dramatically, but risk premiums went up as well. So being in treasuries, being in safe, secure bonds, you know, kind of were the best performing assets. But that really did push up kind of total returns for bond investors. The second half half of the year, the second and third quarter, were really dominated by a compression of risk premiums. So, the Fed's involvement in the market helped kind of push down those risk premiums, and again, boosted returns. You had a nice compression, if you will, in the world of fixed income. And then it's really been in the fourth quarter where bond yields have just really started to kind of creep up and curves have started to steepen, but it's still relatively modest. We're talking, 20 basis points or so, something of that order, relative to the well over 100 basis points of drop in yields that we saw earlier this year. So as we kind of finish the year, there is a longer term trend here. The yields do seem to have troughed, and they do look like they are going to continue to creep higher as we go into next year. But from a bond investor's perspective, it's been a good year. Bond returns are up, call it 6, 7, in some instances 8%. Protecting those returns, protecting your capital going into year end is a big part of how bond investors are thinking about the market today. You mentioned tumbleweeds at the beginning of the show. Some of those tumbleweeds are kind of rolling through our markets as bond investors don't make dramatic moves. They're looking to position for next year.